This tutorial is a project of nonprofitaccountingbasics.org, a free resource developed by the Greater Washington Society of CPAs Educational Foundation. Our goal is to encourage accuracy and accountability to help smaller nonprofits successfully manage and sustain their organizations.
Hello, I'm Karen Roche. I'm a partner at Caliber CPA Group, and today I'll be discussing understanding your impact as a CPA, as an accountant, a controller, a CFO, on your clients' charity ratings. As donors find it increasingly more challenging to choose the most effective charity, they're turning to charity rating services to aid their decision-making processes more and more frequently. There's lots of different resources out there, services that will rate charities. There's GiveWell, Great Nonprofits, GuideStar, Partners for Change, Philanthropedia, Root Cause are some of the ones I listed here as examples. But the one I'm going to focus on today for my presentation is Charity Navigator. Charity Navigator is America's largest and probably the most influential charity rater. In 2014 alone, 7 million people turned to Charity Navigator's website. They impact approximately $10 billion in donations each year. And out of the thousands of nonprofits that Charity Navigator evaluates, only 1 out of 4 earns 4 stars. So how can we, as CPAs, as accountants and consultants, help the charities that we care about to obtain the ratings that they desire? Well, I see our role as very integral. First of all, we need to understand how the financial statement data is reflected on the 990, because that's what they're using to pull from to rate and evaluate the charities that we care the most about, our clients. But we also have to know and understand the performance metrics that they use and the scoring mechanics, and we have to help our clients set goals that are focused on maximizing their particular ratings. So with respect to goals, what we want our clients to do is to be financially efficient, to spend less money to raise more, to keep fundraising efforts in line with the scope of the programs and services they provide, and to devote the majority of spending on the programs and services that fulfill their mission. So now to talk specifically about the Charity Navigator rating, partly because it is probably the most influential, and also it's a very mathematical system, so I thought it would appeal to all of us CPAs out there to learn the math behind all these ratings. So Charity Navigator uses a 2-dimensional rating system, and the reason for that is that it ensures that the highest performing charities are those that excel in all areas, not just one. And another way of saying that is the system is designed so that charities that score very poorly in one dimension but well in the other could not score high overall. So let me talk a little bit about the system itself. The 2 dimensions, the broad categories are the financial health and accountability and transparency. The scoring is for each section, for each broad section, financial health and accountability and transparency, there's 100 total points for each section. So in the financial health area, there are 7 different performance metrics, and each one of those metrics is worth 10 points. Then there's 30 points added to the total to convert to a 100-point scale to get the total 100. On the accountability and transparency side, every charity starts with 100 points, and then deductions are applied against that 100. So let's talk a little bit about the metrics, the 7 metrics for financial health. Program expenses, administrative expenses, fundraising efficiency, primary revenue growth, primary expense growth, and working capital ratio. So metric number 1, program expenses. This is one that we're all familiar with, and it's pretty easy to calculate. You just divide your program expenses by total expenses to get a raw score, and then multiply that by 10 to get the converted score that Charity Navigator uses. So for example, on the screen here I show if your charity has program expenses that are 85% of their total expenses, they would receive a score of 8.5. Now, Charity Navigator adjusts that program expense score if a charity has an average deficit over the period being evaluated. So for example, they typically evaluate over 3 to 5 years, and we'll talk more about this when we talk about program revenue growth and program expense growth. But if your charity, let's say, was break even for the first 3 years of the 4-year period, and then had a significant loss in that 4th year, let's say they had a $100,000 loss in that 4th year, they would be assigned an average deficit of $25,000 over the 4 years. And let's say they had $1 million in a small charity with $1 million as a bottom line total expenses, just to make it easier for the math. That would result in a 2%, 2.5% deduction from that converted score. So instead of getting an 8.5, they would get an 8.25. Metric number 2 is administrative expenses. Administrative expenses, similar to the program expenses, it's total administrative expenses divided by total expenses. And if that number is 0 to 15%, you get the full 10 points. And as your administrative expense percentage climbs, the points that you receive in that category goes down. So that if your administrative expenses are greater than 30% of your total expenses, you earn 0 points in that category. Now, this is a category where Charity Navigator knows that different segments can result in different administrative averages. And so score adjustments are, there's a different scale for charities that are food banks, food pantries, fundraising organizations, community foundations, museums, because those organizations don't follow the general rule. Fundraising expenses is metric number 3. And again, total fundraising expenses divided by total expenses gives you a fundraising expense percentage. And again, if you're 0 to 10%, you're at 10 points. And as your fundraising expenses climb, your points for that section go down. So these are the things that most of us are most familiar with. When I talk to my clients, most clients all know that they want to keep their fundraising and administrative expenses under 80%. But here's the math behind why that's important and what that can do to your score. The next category is fundraising efficiency. It's a little bit different than just fundraising expense percentages. This is how much a charity spends to raise a dollar. And this is a very important area for charities to focus on. And again, if you can keep that ratio to 0 to 10 cents, you're in the full 10 points in that category. And as it costs you more to raise a dollar, your points go down to the point where if it's costing you more than $1 to raise a dollar, there's no points in that category. And similarly, there are scoring adjustments. The scale's a little different for certain nonprofits where it's known that the median expense efficiency rate is a little bit different than the average. So metrics 5 through 7 are a little bit different, not as easy to calculate, and they're referred to by Charity Navigator as the financial capacity performance metrics. They're looking at how well has the charity sustained its programs and services over time, how well is that charity positioned to pursue long-term systemic change, and do they have the flexibility to plan strategically and to pursue long-term objectives. So the way they measure this is by looking at a couple of things. They look at first the primary revenue growth and the primary expense growth. So Charity Navigator is analyzing the charity's average annual growth in their primary revenue and primary expenses for over the 3 to 5 most recent fiscal years. And then they're adjusting for recurring activities that generate unsustainable spikes, things like a capital campaign, an endowment drive, a startup period that might be different than your average. And also they adjust for economic fluctuation by segment. And this is a category where the scores vary pretty widely among different types of charities. And so it's all detailed out on Charity Navigator's website, but there are different scores for the various different types of charities. The 7th metric and the last metric in the financial health category is the working capital ratio. And this is designed to measure the length of time that a charity can sustain their current programs without generating new revenue. And to obtain this ratio, you divide the charity's working capital by its total expenses for the most recent fiscal year. And so if a charity has enough working capital to survive a full year without generating any new revenue, they earn 10 points. And as that working capital goes down, the points also go down. Okay, so I'm bringing you back to the slide, remember, where we had two broad categories, and we just discussed the financial health and the 7 metrics that account for 100 of the 200 points involved. The next category is accountability and transparency, where Charity Navigator is looking to see if your charity follows good governance and ethical best practices, and does your charity make it easy for donors to find critical information about your organization. What do they use for this? Well, they use the additional information on the 990 and the organization's website. So this is an area where we as accountants can make a big impact for our clients. Number one, encourage all of our clients to read the additional information critically every year on the 990. It's an area where a lot of us tend to say it hasn't changed since last year, so we might not even read the questions. And as I go through this, you'll see that there can be these are areas that are very, very easy to fix many times. And these deductions don't have to be there if you just understand the form better and put some practices in place that will eliminate the deductions. So the biggest deductions are 15-point deductions. If your organization, if the charity has less than 5 independent voting members of the board, or the independent voting members don't constitute a voting majority, you lose 15 points. If there's material diversion of assets, such as embezzlement or theft within the last 2 years, without a satisfactory explanation, you lose 15 points. If there's a lack of audited financial statements, you lose 15 points. If there's a material diversion of assets with a good explanation on the additional information, you still lose 7 points. And if you have audited financial statements, but you don't have an audit committee, you lose 7 points. 4-point deductions for a lot of things, and these are some of the things that are very easy to fix or put in place. Loans to or from officers or other interested parties. The organization doesn't keep board minutes. If the 990 is not distributed to the board before filing. If there's no conflict of interest policy or whistleblower policy, records retention and destruction policy. If you don't properly report the CEO compensation, or if you don't have a process for reviewing and updating the CEO compensation. And finally, if you fail to report board members and compensation fully on the Form 990, all of these things will result in a 4-point deduction. Next, so those are the deductions based on a review of the other information on the 990. Charity Navigator also looks at your website for information and deducts where they find deficiencies. So if you don't publish the board members on the website, or don't publish the latest audited financial statements, or if you don't have a donor privacy policy, all of those violations result in a 4-point deduction. Or if you don't publish senior staff on the website, if you don't publish the 990 on the website, or if you have an opt-out donor privacy policy, those would be 3-point deductions. So now, how do we compute the composite score? And here's a nice little equation for those of you who like the math behind it. But basically, you take the financial health score and the accountability and transparency scores and factor them together to come up with a composite score. And in the composite score, if you're over 90, you earn that 4-star rating that we all want. 80 to 90 is a 3-star, 70 to 80 is a 2-star, 55 to 70 is a 1-star, under 55 is 0 stars, and NA would be a donor advisory. So in summary, to maximize the charity ratings for our clients, we want to help them set goals aimed at efficiency. We want to help them understand how the financial information is presented on the 990. We want to pay attention to the additional information on the 990 and encourage our clients to publish critical data on their website. Thanks for giving me your time today. And once again, I'm Karen Roche, and I'm a partner with Caliber CPA Group.